Hey guys, welcome again to the Damilola Forex Academy YouTube channel. In today's teaching, I'm going to be showing you all how to read chart structures like a professional and how you can be able to use the knowledge of chart structures to predict the market accurately. Okay, and I'm also going to be giving some examples with some of the trades that I took in the past week and the current trade that I'm on in order to buttress my points about the essence of understanding chart structures and how you can be able to use it for your advantage in correctly predicting the future movement of prices. Okay, so in order not to waste too much time, let's just get on to the topic for today. Okay, as you can see written on the chart, right, what is chart structure? Okay, what do we understand by this terminology known as chart structure, right? Okay, it's important to note, right, that chart structures are the coordinated movements of prices. Okay, whenever a novice goes onto the chart and the novice sees the movement, of the candlesticks, the novice just thinks that, okay, these are just random green and red candles. Okay, but for we as professionals, we know that these green and red candlesticks are not just random movements. All of these candlesticks, as you can see right here, are not just random movements, and all of these candlesticks have a coordinated movement. Okay, these are not just candlesticks moving on green, candlesticks moving on red. They are all coordinated and they have their essence. Okay, so it's important to be able to understand that okay, all of these candlesticks have their movements and they have their essence. Okay, so now that we have been able to understand that, what is now the next thing we are going to be talking about? We are going to be talking about the different types of this chart structure. Okay, like we said, right, these candlesticks, they have their movements, they make green candles, they make red candles. So one might ask, okay, what is the essence of the green candles? What is the essence of the red candles? Okay, so now it's important to note, right, that the green candles usually indicate a bullish movement, while the red candles usually indicate bearish movements. Okay, but it's important to note, right, that they are categorized into two, okay, which we are going to get into very quickly. First of all, for the types of chart structures, right, we have the bullish chart structures and we have the bearish chart structures. Okay, so we have the bullish chart structures and we have the bearish chart structures. Okay, so it's important to note, right, that the bullish chart structures entails coordinated movements of prices in clear structures of higher highs and higher lows, while the bearish chart structures entails coordinated movement of prices in clear structures of lower highs and lower lows. Just for educative purpose, we could decide to just, go ahead and write that out, that the bullish chart structures entails coordinated movements of higher highs and higher lows, while the bearish chart structure entails coordinated movements of lower highs and lower lows. Okay, so these are what are entailed when we talk about the bullish chart structure and when we talk about the bearish chart structure. Okay, so now the next question is what are these higher highs and higher lows, and what are these lower highs and lower lows? Okay, so I'm going to be briefing it here right here with you guys. Okay, so first of all, for the bullish chart structure, right, when we see prices move in coordinated movements like this, these are what are entailed in a bullish chart structure. Okay, so first of all, let's go ahead and write it below. Bullish chart structure. Okay, this is what is entailed. We said that what it makes clear structures of higher highs and higher lows. Okay, so how do we see these higher highs? How do we see this higher low? First of all, taking it from the beginning right here, this point right here, this is a low point. Then this point right here, this is okay, this is an high point right here. That is low, this is high. Then what is the next one right here? This is, you can see this one right here, this low right here is a bit higher than the previous low, so this one is tagged as an higher low. Okay, and you can see right here the high is a bit higher than the previous high, so we can tag this level here as higher high. So these are continuous, and this is what coordinates a bullish chart structure. Okay, so higher low again at this level, higher low again at this level, then the one above, higher highs at this level. This is how it keeps going. What about here? Higher low again at this level. Then what about here? Higher high again at this level. Okay, so the coordinated movement is what is known as the bullish chart structure. Okay, so what is our job, when it comes to trading? How can we have some fun and trade these chart structures easily and beautifully? Okay, I'm going to go into that. But before then, let's talk about the bearish chart structure. Okay, I promise you guys, with the understanding of this, you guys are going to see a complete and dramatic change in your trading. Okay, so let's go ahead again. So this is push, exhaustion, push, exhaustion, push, all in clear structures this time around of lower highs and lower lows. For example, this right here, this can be regarded as an high. Then this right here, this can be regarded as a low. Then this right here, this can be regarded as a lower high. This right here can be regarded as a lower low. This right here can be regarded as another lower high again. Why? Because it is lower than the previous high, as we can see. Then this right here can now be regarded as a lower low point. Why? Because it is lower than the previous low. Okay, let's put it lower low. Okay, so these are the clear coordinations of the chart structures. Okay, so now the next question is what? How can we use all of this understanding? How can we use it to pick a trade entry opportunity in the market? Okay, so it's important to note, right, that when we go onto our chart, we want to either know if market is trending upwards, which are the bullish chart structure, or trending downwards, which are the bearish chart structure. And we can be able to use the understanding of this to be able to pick trades in the Forex market. Okay, so it's important to note that for us to be able to get our entries right, we trade on the 15-minute time frame. And what is the essence of trading on the 15-minute time frame? It allows us to be able to execute trades in real time. Okay, if market is making bullish movements, we can be able to buy in the direction of trend, quickly sell a retracement, buy in direction of trend, sell a retracement, buy, sell, buy, sell, buy, sell, buy. Okay, so if market is trending upwards, we can be able to quickly make money on the buy, quickly make money on the sell. That's the essence of trading on the 15 minutes time frame. Okay, so the same thing also, if it's a bearish structure, right? We can be able to sell, we can be able to buy, we can be able to sell, buy, sell, buy, sell. Okay, so that is the essence of it. Okay, we can be able to, just ride the trend. Okay, so that is the essence of trading on the 15 minutes time frame that allows us to be able to make money riding this particular trend and just being able to, read the structures and make money in real time. Actually, very good risk to reward. It exposes us to very good risk to reward. Okay, so now how can we be able to make this money right on by reading this candlesticks? Okay, we now have our Fibonacci. The Fibonacci is a very important tool that we are able to use. Okay, for those that don't know how to use the Fibonacci, there is something I have for you, which is what I have: the bootcamp 3.0 coming for you guys. Okay, it starts on December 1st to December 3rd. Okay, it's going to be a very powerful bootcamp. Okay, I originally stated it for November, but I decided that okay, instead of having it in November, let's push it for December. It's going to be a very powerful bootcamp where I'm going to be teaching, of course, how to use the Fibonacci correctly, telling you about all the retracement tools, all the extension tools, and how you can make money with that. There's so many things when it comes to the different aspects of price action trading, exposing every single aspect of reading a trend, exposing our system in its entirety, talking about how to be able to know if a trade is a high probability trade, how to be able to know a low probability trade, talking about trade management, risk management, talking about psychology. There's just so much that is going to be packed in the bootcamp, and it starts on the 1st of December to the 3rd of November, 3rd of December. So every single person that joins this bootcamp is going to be given live access to the recordings. Okay, you are going to have live access to the recordings, and you are going to learn every single thing. Like I said, it was stated for the ending of November before, but I decided to push it to December so that everybody can enjoy their Thanksgiving and come back fresh, to learn and to make money in December, which every single person has enjoyed the Thanksgiving. So right now it's time to get back to work and make money, with this particular bootcamp. So link is in the description below if you want to learn and if you want to join this bootcamp. And I'm going to be staying you right there to teach you and help you get better in your trading. Okay, so back to this, right? We have been able to highlight what the bullish chart structure and the bearish chart structure. Okay, so how can we be able to make money with this, right? In this case, for example, this first instance, right, we've seen that what there's been a bullish push and there's been a rest phase, which is normal. After every push, there must be a rest phase. So what do? We'll now bring out our Fibonacci from the low of the beginning of the bullish push, take it to the high of what? Of the end of that bullish push. Then we can be able to what? To place a buy at the 61.8. Okay, so at 61.8 is what? 61.8 is the level that ends a retracement. Either the 61.8 or 78.6 ends a retracement, right? So we can be able to place a buy at either of these levels, then hide our stop loss at the low. Very simple. And like I said, this could be done on the 15 minutes time frame. Okay, so we can be able to just place the buy. Okay, let's make this a bit smaller. Just a moment. Let's make this a bit smaller so that we can be able to just enjoy it in its entirety. Okay, so we can be able to just place a buy at what? At the 61.8 and right through. Okay, so let's make this pinpoint. Buy at 61.8. We can hide our stop loss below the last low right here and take profits at this level here. So this is the essence of it. You know, the same thing also on the next movement here, we can decide to what? To take the Fibonacci from the low and take it to the high right here, and we can decide to what? Buy pinpoint at the 61.8, either stop loss, you can hide it at the last low, or you can hide it below 78.6, because 78.6 ends a retracement, right? So you can decide to hide it below 78.6. Anywhere below 78.6 is fine, and you can be able to buy to what? To the high where price is rejected before starting that bullish movement. So it's just so beautiful and it's so straightforward. I'm going to be showing you guys live examples of how we apply it. Okay, because on a bullish movement, right, price is on a trend. It's on a bullish trend. So our job is just to what? Okay, ride this bullish trend. We know that what? After every push, there must be an exhaustion, right? Okay, there must be that exhaustion, which is the rest phase. After every push, there must be that exhaustion, which is the rest phase, and these are prices continue. So our job is just to ride that entire movement. As you can see again, we took it from what? From the low point of what? Of the push to the high point of the push, and we can be able to buy at 61.8, either stop loss below 78.6 or below the low right here, anywhere that seems comfortable for us, and we can be able to ride to the high. So this is how we are able to make money with its movements. Okay, make money reading the entire movement, and it's just so easy for us. Okay, and our students have also been able to maximize this very simple understanding, and they have also been able to make money for themselves. Okay, buying at 61.8, hiding your stop loss at 78.6, below 78.6 or at the last higher low, and riding to the top. Okay, so this is how we have been able to make money when it comes to this particular movement. Okay, so the same thing also when it comes to the bearish structures, right? Okay, let's go ahead and just take these bullish structures out. Since we've been able to read it, we've been able to understand it. It's the same thing that applies to this bearish structure. Let's break the bearish a bit closer. Let's take this off and let's adjust the okay, let's where's the short position. There's a short position. Yes, this is good. Okay, so now what is going on right here? As usual, like we said, you bring it this time around from the high where price started to push, you take it to the low where price started to push, and at 61.8, price usually rejects at 61.8 or 78.6. At either of these two levels, you can be able to place your sell. At either of these two levels here, you can place your sell. You can hide your stop loss above 78.6 or above the high right here, and you can be able to sell to any of these levels. You can be able to sell to this low here. You can see this is a beautiful 1 to 3 risk reward. Okay, so you can take it also on the next movement also, bring the fib from the high, bring the fib to the low right here, and you can be able to sell at around the 61.8 zone, and take profits at the lowest point where price is rejected originally, while putting your stop loss above the high. Okay, so these are the very beautiful movement of prices. Okay, so here again we can be able to repeat it put the fib at the highest point where prices started the sell movement, then put it at the lowest point where prices rejected, in order to come for that retracement, and you can be able to sell at 61.8. Hide the stop loss above 78.6 right here, and you can be able to take profit at the low. Okay, so this is how beautiful the entire movement is when it comes to reading chart structures. Okay, so now how can we be able to apply this in real life scenarios, right? It's so easy. Okay, remember we said that what you have to use the understanding of chart structures with the understanding of Fibonacci, and that is what we are able to use in its essence for high probability trade entries in the forex market. Okay, so I'm going to be talking about the current trade that I'm in on prices, but first of all, let's just briefly take some of these things up so that we have a clear chart that you all can see and you all can be able to learn from. Okay, so now this is the 15 minutes time frame, right? And this is the I'm going to show you the last couple of trades I took, and the last couple of trades I took, and the current trade that we are on. Okay, and how we are able to use this knowledge I just taught you guys for high probability entry. Okay, so first of all, we took it from here, from this low point right here, and from here we said this is push, this is exhaustion, right? This is push, this is exhaustion, right? This is push, and there was a break of structure right here. The last higher low got taken up. Okay, if you don't understand break of structures or change of characters, this is why you need to come to the bootcamp, because in the bootcamp there's a broad knowledge that I can't just teach in one video. Okay, because we also do what is called top-down analysis and all of this very broad knowledge that brought us to the 15 minutes time frame, which is our entry time frame, right? So there's so much broad knowledge that you guys will need to learn on the bootcamp. Link in the description below. Okay, so now there's been a break of structure, right? The last higher low got taken off. After the break of structure, we understand something called a discount. Okay, after a break of structure, my students know there's something called a discount, where prices pushes back. It will never break above the high, but it will just push back to like 78.6 or 61.8. Then we are able to tap into our entry at any of these levels, either the 61 point or 70.6, and sell to the 61.8 level to complete the retracement. Okay, so in this case, how do we get the discount? We'll bring out our fib. Okay, this is the fib. We'll take it from here. We'll take it from here, from the high to the low point of the fib, and we can decide at what? Okay, at 78.6, let's sell prices at 78.6. Let's collapse this a little bit. Let's collapse this a little bit and just make it pinpoint. So at 78.6, we can be able to sell. We can be able to put the stop loss at the high right here, and then we can be able to sell down to the 61.8. You can see that this is a very easy one to fall. Selling at 78.6 or selling at 61.8, either or is good, and you can be able to make almost a 1 to 5. Depends on if you sold at 61.8, which is like 1.23, and if you sold at the 78.6, which is a 1 to 4 point risk to reward. So depending on this, you can be able to make some very, very good amount of money. Okay, so with that, when we sell, where are we taking profit? We're taking profit at 61.8, because 61 like we said, ends a retracement. You can see this is the fib. I already wrote it there, 61 ends a retracement, because what prices, as we can see, is on clear bullish structure. So 61 ends a retracement. This means at 61.8 also, we can be able to ride a trend by buying pinpoint at 61.8, hiding our stop loss below 78.6, which is around here. Or let's bring out the fib from the low to the high. You can see the 78.6, we can hide our stop loss below, and you can see we're already in profits, where we'll buy to the highest point of rejection for almost a 1 to 3 risk to reward. Okay, so this is how we are able to use it in its essence, and it's very beautiful. You can see that prices on all these movements here are on bullish structures, right? Our job is to what? Bring the Fibonacci from the low points, okay, where the bullish movement started, take it to the high points where the bullish movement stopped before coming down for the retracement, and at 61.8 or 78.6, either or, you can be able to buy, because we know that either of these two levels ends a retracement, right? You can hide your stop loss at the low, and you can be able to buy, in this case, 1 to 3 risk to reward, and this is the 15 minutes time frame. Very quickly, we're able to make money, we're able to close profits, because it's the 15 minutes time frame. So prices moves in time. Okay, same thing with this movement right here. Take your Fibonacci from the low point right here, take the Fibonacci to the high points right here. This is the 61.8. You can be able to buy pinpoint at 61.8. Price did not get to 78.6 this time around. Instead, it stopped at 61.8, which is 100% okay, because any of these two levels ends a retracement. Then, as usual, we can hide our stop loss. Okay, we can decide to hide our stop loss at what? At 78.6, or hide our stop loss below this last higher low, either or. But if we're hiding it at 78.6 on this trade, we can be able to make another, almost 1 to 2.5 risk to reward with prices by buying, to the resistance point. So same thing here also. This is how we are able to just continuously read structures, okay, and make money with it. Same thing here also. Can bring the fib from the low point right here, bring the fib to the high point right here. We can see that price is rejected 78.6 this time around, and we can be able to buy at 78.6, hide our stop loss significantly below 78.6, and we can be able to ride to the high. Okay, the high point where price is rejected for about 1 to 5 risk to reward. And you can imagine this is 1 to 5 risk to reward, and we are hitting take profit under a day. Imagine putting just a meager $100 on this trade, you'll go with $500 plus. Imagine putting $1,000, you go with $5,000, and these are we're able to consistently make incredible amount of money in the forex market by just understanding chart structures and understanding the use of Fibonacci. Just go on to the 50-minute time frame as you've seen, and just understand that, okay, first of all, is prices on a bullish or on a bearish movement. If it's on a bullish movement, then you know that what, okay, my job is to ride this bullish movement. Bullish movement means that what, price is making continuous movement of higher highs and higher lows. Okay, just as you can see from here, bullish movement means that what, higher highs, higher lows. Okay, higher highs, higher lows, higher highs, higher lows. So we know that what, these higher lows end at what, it ends at the 61.8. So we know that what, at 61.8 we are able to tap into a buy and buy the bullish movement. Okay, just as all of these movements happen, all of these are push higher high, prices came for an higher low here at this 61.8. At 61.8, I'm able to tap into a buy and I'm able to swing to the top. While I can also be able to sell, a retracement also. I can be able to sell that retracement down to the 61.8 when a break of structure is confirmed, as it is in this case, where the break of structure, like we said, was confirmed. Okay, that means we can be able to, sell a retracement down to 61.8. And at 61.8, this ends a retracement. We're able to buy in its essence to the entire top. Okay, so if you want to learn more, like I said, our bootcamp starts on the 1st of December to the 3rd of December, and it's going to be a lifetime access if you want to learn it. I'm going to be teaching you so much, and I made it very affordable for every single person, okay, to be able to learn. It starts from the 1st of December to the 3rd of December, and it's going to be extremely powerful. I want this to be the most impactful bootcamp in the industry, where I teach so many things you can be able to see, so many things I'm going to teach when it comes to the significance of each of the multi-time frames, top-down analysis, how to maximize the trend, add-ons. So many of you don't know how to add add-ons on trades correctly, mastering reversal zones, potential reversal areas. I'm going to I have a customized trading plan that I'm going to send to you guys that's going to suit your trading. I have a trade projection and growth sheet I'm going to be sharing with you guys. There's just so much. I want it to be the most impactful and the most powerful bootcamp in the industry. And I'm going to be seeing you all on 1st of December, and we can be able to make money together. See you guys on the next one.